Well, let's move on from one corporate to another. Canfin Homes is well in focus. Let's connect with Girish Kousgi, who is the Managing Director and CEO. Thanks so much for taking time out. Now, to begin with, we were just talking with the management of PNB regarding, PNB Housing, where Carlyle recently picked up a majority stake, and PNB now is going to cease to be the promoter. Do you think that we can expect some sort of a similar movement for Canfin Homes? Is there a case perhaps down the line for Canara Bank selling their majority stake as well in Canfin Homes?
Good morning. After the last update, which is in public domain, we are not privy to that, and I don't think so. We as a company would really, look at any promoter change. We basically focus on the business and operations. So I would not be able to comment further on that.
Okay, fair enough. Won't even probe. Now, as an industry player, I just want to talk about how you're looking at the overall environment when it comes to M&A activity within the housing finance company space. What do you think are going to be some of the key triggers?
I think in next couple of years, there could be a lot of M&A. That's largely because we had COVID, the first wave, now second wave, and people are talking about third wave. So definitely, some of the smaller players would want to try and be associated, in this kind of events, so that it could be win-win to both of them. So going forward, you can see probably some of the smaller players, being keen, for this kind of events of M&A. Otherwise, if you look at large players, I'm sure market is quite robust. After COVID-1, we saw that demand came back very, very well, and even in the second wave, we will see demand coming back quite well, because housing is basically infrastructure segment, and you'll see a lot of activities. So I don't think so. This industry will do well for next 5, 10, 15, 20 years. So I don't think that some of the big players would want to really, defocus from this segment as such. So this industry will do well. Some of the small players probably might be keen for M&A, and you would see a few things happening in next couple of years.
Now, the impact of the second wave has been very severe, while demand has been fairly strong for housing. Are you seeing an impact on the overall collection efficiency?
If you see demand compared to first wave, second wave is better, because during first wave we lost entire Q1, whereas in second wave we are still through the Q1, and we see that some of the states are talking about unlock theme. So the impact on business from second wave is going to be much less compared to wave 1. In terms of collections, last time we had morat. This time we have restructuring option, where within restructuring, if customer is in stress, you can definitely restructure with an option of 6 months or 9 months morat, and the balance could be a step-up EMI. The only challenge is that, today if you look at MSME and consumer loans, mortgage is part of consumer, retail loans. On asset classification and provisioning, I think there is some differentiation. I think a lot of forums have approached RBI seeking clarification, and probably to get that kind of benefit what MSME has got. Probably if that comes in, I think it will be really good in spite of second wave, in terms of getting customer to understand and pace out repayment. Even otherwise, we have restructuring plan. I think we can cover most of the customers. The only challenge, especially for private banks, HFCs and NBFCs, would be in terms of asset classification, especially for accounts which slip into NPA in the month of April. So I'm sure that we might get clarification maybe in a week or so, but till such time I think this gap exists. Having said that, demand is quite robust, and we have seen in the last time as well, after COVID, all the companies were able to put up good show, both on collection as well as business spread. This time, the stress on collection, especially for April, I think some states in March, most of the states in April, the collection efficiency was quite low. Same thing continued in May as well. But June, I'm sure, is going to improve drastically. And since this has happened, within the quarter, as of June end, most of the companies will be able to control, increase their efficiency, and put a better show on collections as well.
Sure. Wanted to understand what are the key customer growth trends that you are seeing right now in the second wave, and especially how it's impacted tier 2 and 3 cities?
This time we see that, COVID-2 second wave is short-lived. I think the curve is very short. I think everything seems to be getting over in about 70 to 75 days. So in that sense, yes, you will have an impact on business in these 70, 75 days. You will have impact on collections in these 75 days. Otherwise, demand is intact. We saw that demand picking up from October onwards last year. October, I think Q3 was great for most of the companies. And Q4, a lot of companies, they put up highest ever number. I think demand is quite intact. We see that in some of the major cities, in the outskirts, demand is picking up. In tier 2, 3 and 4 cities, demand is quite robust. So basically, whatever all these companies lost in terms of business during COVID times, it's only pent up, so it will come back after COVID. So I don't see any gap in demand as such going forward.
In the fourth quarter, we were on a recovery path and disbursements stood at an all-time high. Looking at the current situation right now with the pandemic, etc., how is it the disbursements are shaping up, and what can you tell us about the visibility going forward?
If you look at quarter on quarter, definitely you will see a dip in quarter one because of second wave. Quarter four was very good for Canfin. Same thing is true for the industry as such. But now, because in COVID second wave, mobility was a big challenge, and therefore customers were not walking in, and obviously we were not in a position to go and source business from customers, and therefore business there was an impact. And same thing is true with collections as well. So quarter one we will see an impact, but the impact compared to last year quarter one is far less because second wave curve is very short, and therefore in fact last time March 4th week COVID started, whereas this time in most part of the country, COVID started in the month of April, and that was not just beginning. I think it took a serious turn by third week of April. So first 3 weeks, most of the companies did good collections, did good business. So that advantage you have in this quarter compared to last year quarter one. And this month, in the month of June, lockdown will get over by about 14th or 15th in most of the cities, and you will see some business and some collection efficiency improving in this month. And therefore, I say that quarter one of this year is going to be far better compared to quarter one of last year. And last year, it took almost about 6-7 months for demand to come back. It started in the month of October for most of the players, whereas this time is going to probably start from July. So in that sense, this time, COVID second wave is short-lived. To that extent, there will be improvement in both collections and business. The recovery is going to be much faster this time, and therefore you will see this year a lot of companies putting up better show compared to last year.
Okay. Give us a sense then as to what your outlook is when it comes to the NPA trends, because reports do suggest that the NPA stress is likely to rise next fiscal. So how much stress are you expecting to reflect on your books in the upcoming quarters?
It all depends on asset classification and provisioning for quarter one, which we are expecting might probably come in the next 7 or 10 days' time. Now, having said that, even if there is little surge in NPA, we are well covered. We are holding additional provisioning of 70 crores. I think that will take care of any increase in NPA. But yes, I'm sure that this month there will be a good pullback on recovery, and therefore the efficiency will be much higher, and surge in NPA won't be substantial in Q1 compared to Q4 of last year.
Okay, great speaking with you. Thank you so much for taking the time out and joining in and really highlighting how you foresee the quarter ahead when it comes to Canfin Homes, Girish. Good speaking with you.